So super quickly, I just wanted to come in here and share this game with you guys, right? So this is how I became marginally profitable. Sorry, I haven't been to school in a long time. I couldn't pronounce the word. But marginally profitable. So let me tell you guys on a quick story, right? So once upon a time, I started trading a couple years back. I was losing money consistently. Then I would have a green month or a month where I was profitable, maybe like twice in a year or once in a year. And fast forward to the point where my psychology is in order. My risk management, I put stops on all my trades, and I'm developing an edge. So I'm beginning to see, that I'm no longer losing money. I'm actually ending up the month's break even, and then fast forward to now I have edges that have backed by data with objective list of how to execute the edges and all the good stuff that they always talk about when it comes to trading. And then my results started to show, and I also became profitable, started getting funded, started getting payouts, all of that, right? So I just wanted to say, this is how I this is one tactic I switched up on that made a big difference in my trading. I wanted to share with you guys. Let's get into it. So let me think about it real quick. All right, the best way to make to you know dissect it for you to understand. When I became profitable, I had one strategy that worked. I discovered the strategy by going through my data. I call it the SW tap because I'm SW, and it's tap. That stands for time, area, and price protraction. And the combination of these three things creates a very powerful, low risk, high reward type of setup, right? And it's very simple, honestly. If I could show you on another video, probably I'll make another video going into that. If you guys want me to make that video, just comment it. Comment tap. Put tap in the comments. And I'll break down my exact strategy, the exact tap strategy that made me profitable, helped me to get my first payouts, and all of that good stuff. But so because I'm a day trader, right? So amongst the different types of trading I do, I also day trade, and I enjoy day trading the most off of the 15 minutes and the 1 minute time frame. New York Open. I discovered that because I only had one strategy, I couldn't trade every day because the tap would only show up maybe 3 or 2 times in a week. One being the least, at least you get once in a week. 3 being the most, but you wouldn't get it all 5 days of the week. But when it does come though, it's a short, at least 150 points trade in profit. But the thing is, I wanted to be a trader that traded every day if I could. Not saying I want to trade every day. Some days I take breaks, some days I'm tired, some days you just need to, take some time off. But I wanted to have the ability to show up at the markets every day and consistently be profitable. Of course, now growing up, I've learned that it's not productive to try and trade every day. Not every day is a good trading day. And it's not because of you, it's just the market conditions. And some days are better probability than others. Some days are days where you're supposed to be more conservative. Some days are days you're supposed to be more aggressive. There's nuances that you learn over time as you go deeper into this thing. But what I'm trying to say is this: I had only one strategy. So because I had one strategy, I couldn't trade every day. So what I would do is this: I would have the Nasdaq open on one chart, and I would have the Dow Jones open on another chart. And the idea was this: this strategy will have to happen on at least one of these markets. That way, I can take more trades in a week. You're following. I wanted to take more trades, but I had one strategy, a powerful one. So I would look at 2 markets. But down the line, looking down at statistics and everything, I discovered that looking at 2 markets is distracting for somebody like me who's trading off the 15 minutes and the 1 minute. Because if you're familiar with trading the 5 minute, 1 minute, and 15 minute, you know that things can happen pretty fast. So if you're not focused, and one thing about the market is when something happens, there's no going back. When price starts to move, you can't get back to your average price that you would have gotten if you had been there from the beginning, unless there's some type of retracement. So I discovered that looking at 2 markets at the same time was actually counterproductive because it wouldn't allow me to actually focus. You get what I'm saying? So what I started to do was this. Instead of looking at the two markets at the same time. I traded for a while, honestly, without having a textbook edge, just price action. And I began to see and discover more edges in the market. I began to record them, study them, make it an objective way of executing them. And what that did for me was it created a larger list of more edges I could take. So now, instead of looking at two markets, I began to look at just one. I'm a firm believer of what Wakara Sim says. A restricted trader is a profitable trader. That's why I day trade only one market. I like to focus. They say spread your eggs in different baskets. Don't keep them in one basket. I personally believe that you keep your eggs in one basket and just look at that basket really hard. So what I do is I trade one market. I have multiple edges, so that virtually every day of the week there's going to be something for me to take. You see how we solved that problem of wanting to trade but not being able to trade every day? We started looking at just one market, so now we can actually be dialed in and focus on price action. And then we increased the number of edges that we had so that we can trade continuously throughout the week as the week progresses. But that wasn't enough. That's the first aid that I've given you guys, right? So you can write that down, you can lock in, focus on one market, have more edges, so that you can trade that market more often. And the market should move. It should be a good moving market so that you can actually take something meaningful off of it. So then the second problem was this. Now I have more edges, but all edges aren't the same. So some edges, like the type I mentioned with purpose, that it's going to give you at least 150 points in profit. Some edges won't give you 150 points. So if I'm targeting to take 150 points from every trade I take, I'm going to lose a lot of trades. I'm going to end up break even a lot of trades. So after looking at the days going by, I discovered that there was an inefficiency in my profit-taking methods. Although I was taking trades, I would end up with far less than I had maxed in the trade in terms of profit, or I would end up taking a loss after being in a trade that went to my favor. So what I did was, the second thing which I want to share with you guys is I reduced my target. Reorient yourself to think that trading is a marathon, it's not a sprint. Small profits every day add up to larger profits at the end of the month. Small profits every day add up to green months, profitable months. So I started to aim for 60 points. Every day on the Dow Jones, there's multiple 60-point trades or 40-point trades. But there aren't multiple 200-point trades. Now, you can be in a trade that will give you 60 points and then go on to give you 100 or go on to give you 200 you get what I'm saying? So I built my system in a way that could accommodate for the possibility of running up higher, but would ensure that I take 60 points out of the market. And by doing that, I'm able to take 60 points consistently out of the market. Now it's a question of increasing your size. So instead of trading one account, I trade 5 accounts. Instead of trading 5 accounts with one contract each, now I trade 15 contracts. Still the same 60 points. But do you see how 60 points times 5 was $300? 60 points times 5, now with 10 contracts, I'm making $3,000 on a trade. Still the same 60 points. I'm just increasing the size. Because the fact that you're taking a 60 point increases the probability of actually closing in profit. Some of you are trading for flair. You're trying to be the Neymar of trading. You're trying to show that you can get these big home run trades. But these big home run trades don't show up every day. Neither do they last long. It's not every time they're going to get a big home run trade and then it's actually going to keep going in that direction. At some point, it's going to reverse. So you have to make sure they have a way of locking in profit and making the day worth it. You know what I'm saying? So that's the aid, really. That's what I came out to share with you guys. Was the first thing I did was focus on one market and increase the number of edges I had. Study them, make sure it's backed by data, create an objective way of identifying and executing those trades so that you can do it flawlessly over and over again. Then the second thing I did was reduce my profit targets. Instead of just using technical levels and putting it at some old high or some old low or PDRA or whatever it is you want to target, I started using a basis points in terms of distance that the trade actually runs. You know? And that's what helped me to go from the story I started off this video talking about to the consistently profitable trader I am who gets payouts on a regular. So I hope this video was able to help you guys. I hope that you learned something from this video. And I want to say best you all for watching this video. If you want to see, actually, let's end there. All right, so yeah, have a wonderful rest of your trading week. Love, peace, and blessings from Jah Rastafari.